some puts coming in. So the idea of this, let me get rid of the drawings. The idea is as soon as you see puts, of course, as soon as you see the puts coming in, you just obviously start marking the area. Now what you're really looking for, Stuart, is an overlap of puts or an overlap of calls. One single batch is usually not going to give you much to work on, right? Now the other thing you've got to remember is that the slope on the puts line might go from one point to the other, so it's always best to remember that as you drill down into lower time frames, it's where the line closes is where the data is known. So that's obviously something that you've got to remember when you're looking at these things, and that's why you've got to watch these areas for information, right? So it's where the line closes. So the line closes here, so that's where we then call that as a put, right? So we call that as a put just there. And obviously that's that area just there. So when I see that as a put, I'm obviously looking at the candle that's involved in that put, and I can say, okay, well that looks like a put, so that's going to be a line. We can keep that as a line at that stage. We can see that that seems to have got the necessary, as soon as that hits there, we know that there's going to be selling coming in. We can join in a quick sell if we get an opportunity to run into that trade. Now that means, of course, that this is always going to be a level we can attack into, but the more we get in this area and the bigger this is, the better, obviously, for the short trade. The better for the short trade, yeah? So when that put gets wiped out by this call option, of course, that negates the gammas at that stage, doesn't it? So we can see that the green line is evident at this point. So we start looking at that and saying, well, there's no buy side rush on that trade at all. So I'm not really looking at that as a gamma trade. I'm not looking at any attempt to do any gamma trade on that at all. And there's no gamma hedging on that trade at this point, is there? So I'm not going to use that one. When I get this point here, it's obviously a call option again. And again, I can see that on that candle, there's no gamma hedging. So again, I'm just going to pass up on that information at this stage. And I'm obviously watching to see if the price starts doubling back against these levels, okay? I'm always watching to see if the price doubles back against these levels. If you then put these calls in, and you see the price doubling back against these levels, because obviously this might have been a synthetic, and it might have turned into what? It might have turned into a large accumulation, but obviously you would have to analyze the volume on these down candles for high surges in volumes. And obviously I've got it on the SPX, so I'd have to really change that actually to the ES so that I can see the volumes at this stage, okay? So I've just changed it to the ES now so that it makes a little bit more sense. So let's catch up with the big move south here. Let's catch up with this phase here. Context-wise, we've got a lot of movement here. And again, when we see a level, when we see a price line, we draw it in. So we can see a price line here. There's call options just here. So that's obviously something that we're paying attention to right there. If the price goes below it from those call options, then we obviously watch for the absorption pins. That suggests a commercial accumulation. So that's bullish. So this is an area that you'd now call as a bullish trade. Because obviously when the price dropped, the volume started to absorb all that selling and the price went up from that point, yeah? So that's good news. We've got some information there that tells us that there's maybe somebody accumulating at that price. So that's something we've now got in our ideas. When we see this put option coming in here, obviously it's going to be likely to be located somewhere in this area just here. We can see that there's not very much associated with it. There's no attempt to really drive the price down. The price does come down and it goes up, so we obviously watch again very carefully because obviously there's even more just here on that big pin rejection at the top edge. And this does drive the price down on this occasion. So there's a put option here, and then there's a put option here, and there's bigger stock volumes there. So this is now a price that I'm looking at and saying, okay, that looks like a commercial seller sitting at that price. When the price tested into that, that gives me an idea about a possible play right there, and I could sell into that little phase. Now, obviously, what happens is that the price then doubles back, does nothing, and breaks through the top edge here. There's a big option play here again, and it's another put option, but again, the price goes up on that put option. So you just notice these areas. So this becomes a very slippy area because the dealers are quite happy to let the price go above. Because these are all put options in here, right? These are all put options in this area. So inside this area here, all these put options, the dealers are going to be happy for the price to go up. They're not going to be happy for the price to go down. So this becomes a sellable area down here. If we start seeing the price slipping through this area, you can see this area then gets defended. And obviously these are the big option trades, these ones that we've just marked. And you can see that when the price attacks this area here with this failed auction in the background, look at what happens, guys. As soon as that failed auction happens there, the dealers are now recognizing the failed auction. And then we get the big squeeze through that short position right there. And that's exactly how that trade took place. We come down to that defended commercial buy level, and the buyers absolutely destroy the upside at that stage as well. So it's just developing out a picture of this, isn't it? So when you're looking at these areas, you know that this is a big sell zone. You can see some call options come in up the top edge up here as well. So when it goes through those put options, when it goes through those put options, you can see that acceleration from that phase. You can actually start to understand why this started to kick off a big selling phase right there. And we managed to run the stops all the way through that process, didn't we? So you see that acceleration down through that phase was the fact that this series of put options that came in here, we should really just mark them, but it's probably about here. The next put option was on this candle here, so it's probably about here. And the next put option was just above here. So these are put options here. So with those put options coming in through that phase, as soon as the price comes through that phase, Stuart, we get this big sell kicking off, and it kind of cascades through to the big call option at the bottom edge. And that's what you're seeing at the bottom edge just there. Now, obviously, as we go into the short term, that's obviously the big early trades. That's obviously the big put options from the early trades. So when you see that developing, the big commercial buyer at the bottom, but the two put option sellers, buyers here, and obviously these are the sell levels. Now, so when the price goes above the sell level, look at what happens. The price goes above the sell level, pauses, but look at what happens when it can't go any higher above the puts. Look at what happens. As soon as that price starts attacking that area, it accelerates rapidly through that price. Because obviously the dealers who were short in here, well, they've unwound their position there. So if the dealers have unwound their position, what happens next? Well, the dealers have to re-hedge by selling stock at that stage. Selling stock at that stage, isn't it? So you can see it happened again here. They took the price up again, and the dealers had to re-hedge selling stock again here. Had to re-hedge about selling stock again here. Now, they're defending this, but obviously if the price goes through that area, because there's call options coming in here, if the price goes through that area, then you could obviously anticipate quite a sizable sell coming into this area, couldn't you? So obviously if we started to see some put options coming in here, we would expect to see this market really cracking to the downside, and we could expect it maybe trading 39.16s. Yeah. So when you're looking at that, chart there, it kind of makes a bit of sense now. But it's just a case of breaking it down into its individual component parts, piece by piece. And there's that acceleration through it. See it. There it goes. That's exactly what it said was going to happen, guys. Beautiful, right? Beautiful. Sexy like a box of chocolate strawberries.